Welcome. In this video, will ZBCN coin price increase further? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When we carefully observe the path that price movements follow over a certain period, a curving and upward structure becomes apparent over time. Unlike classical upward trends defined by straight lines, this structure is more organic, more curved, and at times gains momentum while at other times flattens out. In technical analysis, such curved formations often emerge in scenarios where market momentum progresses in a consistent yet accelerating manner. For this reason, the rising curve trendline that the price is currently approaching holds a critical technical significance. These types of curves typically indicate that market participants have a long-term positive outlook. This is because, in such a trend, the price advances by raising both the lows and the highs over time. However, this movement does not develop along a linear line, but rather in a form closer to logarithmic or parabolic. Therefore, in technical analysis, this can be referred to as a curved upward trend, or a softly sloping upward formation. The curve that the price is now nearing has proven effective many times in the past, meaning that when the price reached this level, it reacted upward and initiated significant rallies. Looking at previous price movements, we can observe that this rising curve has repeatedly acted as support. Each time the price touched it, it gained strength and accelerated upwards. Structures like this are considered important reaction zones by investors. Especially when a curve that has worked so effectively in the past is approached again, it creates an expectation in the market of a potential repeat. According to the principle of history repeats itself in technical analysis, it is a strong scenario that the price might once again test this level and move upward. In this context, the price approaching this curve right now represents a critical retracement point. A short-term correction that brings the price to this curve, followed by buying activity, could very likely initiate another upward move. Especially in these types of curves, when the price pulls back gradually rather than sharply, it shows that buyers are prepared and that there is no sense of panic in the market. This strengthens the impression that a healthy upward trend is continuing. There has been no price movement dipping below this curve on the chart, and areas near this line have always functioned as liquidity zones. This means that major players and institutional investors have preferred to open positions when the price nears this curve. Such behavior lays the groundwork for the price to find a base here and start another upward push. Especially if an increase in volume is observed in these regions, it helps us make stronger conclusions about the direction of the price. In addition, another technical significance of this curve lies in its psychological effect on the market. These types of curves draw less attention than straight trend lines but function far more reliably. This makes them hidden support levels. Once investors recognize these levels, the positions taken here tend to be held with confidence, and the price tends to move upward more smoothly. At this point, the price nearing this curve once again could open a new window of opportunity from a technical perspective. If another upward reaction occurs here as it has in the past, the price's first target would be previous high levels, followed by a move toward even higher peaks. If this movement is supported by positive news flow or a general sense of optimism in the market, a much faster and uninterrupted upward trend may emerge. In conclusion, the price approaching this rising curve, which has served as a strong support many times in the past, is a technical development that should be closely monitored in the market. If history repeats itself once again, this curve could form a strong base for the price to gain new upward momentum. But we cannot rely solely on the curve. For analysis, let's take a look at the other metrics as well. Stay tuned. When the chart is examined in detail, it becomes clearly observable that price movements are evolving toward a specific structure. The formation that has emerged, especially in recent periods, points to the inverse head and shoulders pattern, which holds a significant place in classical technical analysis approaches and is known as a reversal formation. This pattern typically appears after a prolonged downtrend and is considered a strong reversal signal, indicating that the downward momentum in the market is fading and that buyers are beginning to gain strength. Within the currently observed chart structure, the key components of the pattern, the first shoulder, the deeper low forming the head, and the developing second shoulder are becoming increasingly distinct. In the first shoulder, the price dipped with a certain decline and then rebounded to mid-levels. Following this, in the head area, the price experienced an even deeper drop, but this time the recovery was stronger, with the price returning close to the shoulder level. At present, the price is attempting to form the third and final part of this structure, the right shoulder. The right shoulder is typically similar in depth to the left one, and from this point, the price tends to move toward the neckline. The critical factor in this process is whether the neckline will be broken to the upside. A volume-supported breakout of this line indicates confirmation of the pattern and is often seen as a strong signal that the trend has turned upward. The formation of such a pattern should be evaluated not only as a technical structure but also as a reflection of market psychology. During the decline of the first shoulder, investors may have faced selling pressure and exited positions in panic. However, although a deeper bottom formed in the head area, the rapid recovery that followed indicates that selling pressure is weakening and buyers are stepping in. This process suggests that the market is gradually stabilizing and entering the final phase of the downtrend. The currently forming right shoulder signals that this balance is nearing completion and that buyers are preparing to take control. For this type of structure to be fully completed, the price must rise toward the neckline and break it with strong volume. Volume is a key factor here, as breakouts with weak volume are often false moves. However, if the neckline is broken with increasing volume, the likelihood of the move continuing is much higher. According to technical analysis rules, the target after the breakout is calculated by adding the distance between the deepest point of the head and the neckline upward. So once the pattern is completed, a price rise equal to that distance is technically expected. The healthy formation of the current right shoulder movement and its progression toward the neckline without dipping too far will make the pattern function more reliably. At this stage, it's important for buyers to remain strong, for selling to be limited, and for the price to exhibit upward pressure. Otherwise, if the price drops too much during the formation of the right shoulder, the pattern may fail or become invalid. However, the current technical structure and price behavior indicate that this pattern is close to maturing and that a move toward the neckline may soon begin. In conclusion, the developing inverse head and shoulders pattern stands out as one of the most reliable reversal formations in technical analysis. If the price completes this structure and surpasses the neckline, a bullish trend may begin, allowing investors to enter with confidence. The most important point to watch here is whether the price can settle above this level and maintain it after the breakout. If the price succeeds in doing so, reaching the pattern's target levels will only be a matter of time. RSI is one of the most commonly used indicators in the market and one of the most important oscillators that investors use to measure momentum. This indicator provides early signals about potential reversal points by showing whether the price is approaching overbought or oversold levels. However, RSI does not only operate at the 70 and 30 boundaries. When used together with trend lines, it can provide much deeper signals. Especially the direction RSI follows over a certain time frame carries significant meaning in terms of technical analysis. The structure currently observed on the RSI should be evaluated within this framework. Looking at the current chart structure, it is noticeable that the RSI indicator is moving along a clearly upward trend line. This trend line shows that RSI has been making increasingly higher lows over time, indicating that momentum is gradually strengthening. The meaning of such rising structures is this: even though the price occasionally makes corrections, buyers consistently step in at higher levels, continuing to push the price upward. This is an important detail that shows not only the price but also market sentiment is becoming increasingly optimistic. At present, the RSI indicator has started to pull back toward this upward sloping trendline once again. If, as in the past, RSI reacts upward when approaching this line, this will likely be reflected positively in the price as well, because a bounce off the RSI support trend usually signals a new wave of momentum. This implies that the price may begin to rise. RSI should not break this trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.